Good morning. Good morning, everybody. Welcome back. Happy Friday. Woo! Thank God it's Friday, man. I am excited to be here. We got a big day ahead of us. Big day ahead of us today. So super stoked. Hopefully today is a better day than the last few. Just again, market's been moving, pushing on up, but not a lot of great opportunity, in my opinion, based on how I trade, what works best for me. It's been slim pickings this week, guys. So maybe today we got something because we got a lot of data. We had Amazon earnings last night. I think Amazon's still down a little bit here in pre-market. So we're going to talk about everything, guys. Review some of your stocks as well. See what you guys are looking at. And we'll go from there. Get you guys prepared. See if we have anything that's looking good for some trades, so we can lock in some nice profits and end the week strong and profitable, man. That's how we're going to do it. We're going to end the week strong and profitable. So before we dive into it, go ahead and hit me with a good morning. All right, where are you guys tuning in from right now? Hit me with a good morning. Chipotle. CHPT. No, that's Charge Point. I thought that was Chipotle. Charge Point. We can look at that, man. We're going to dive into the morning breakdown first, right? Look at the economic calendar. Make sure you guys are all set there. Then we'll take some time and go through and look at those individual stocks. Big Ron over on YouTube. What's up, man? Good morning. So this is how it's going to start working. All right. I'm going to be stingy. No, I'm not. We get 1,000 likes. We do a ticker review, right? Then every 1,000 likes, I'll review another stock. So if you guys want me to look at your stocks, you got to get the likes up. And then first and foremost, good morning. It's easy. Type in GOOD space MORNING. Enter button. Boom. That easy. There we go, Chad. What's up, man? That's NVIDIA. We'll look at NVIDIA for sure. I know Big Ron's over on YouTube getting the likes up. I appreciate you, man. Always holding it down. What's up? All right, guys. Let's do this. Let's dive into it. Let's talk about what we got going on for the day. And then, yes, be patient. We will definitely review your stocks as well, guys. Don't worry. We got an hour together. I got you. All right, but first and foremost, got to get prepared for the day, man. What do we have coming on up? We got key data, key events, Fed speakers. Could something move the market? It's easy. Take like 30 seconds, guys. Every single morning, go to your beautiful economic calendar and just look at it. Just look at it, guys. It's easy. A lot of traders don't do this. And they're like, Josh, I lost a lot of money today. The market moved out of nowhere. Why'd that happen? I'm like, did you not know we had key data at 10 o'clock? What's that mean? I'm like, wow, there's still a lot of people that don't know this. Do it every single freaking morning. It takes like 30 seconds. So today, Friday, February 7th, what do we got coming on up, guys? We have non-farm payrolls. That's some key data dropping here in about 18 minutes and 42 seconds. That could be a market mover, followed by unemployment data here at 8:30 as well. You got Fed Kashkari speaking at 8:40. You got Fed Bowman at 9:25. Then you do have some more key data dropping here at 10 a.m. That's Michigan consumer sentiment data. All right, so if you guys don't have any swings on the table, you good. If you guys trade futures, you need to be mindful that at 8:30 you got some key data in the market. We'll probably move to it. We'll definitely move it. They'll definitely react for sure. And then other than that, for those of you that primarily trade like, shares, options, you got to be mindful of that 10 o'clock data. Again, that's Michigan consumer sentiment. Here at 10:30, you got Fed Goolsbee speaking. I like saying that name, Fed Goolsbee. Sounds like he should be in a Halloween movie. Then you got 12 o'clock, you got Fed Kugler. Another one, like Freddy Kugler. You got Fed Kugler, Freddy Kugler. He's going to slice you up a little bit. Slice the market up, slice and dice. 12 o'clock, you got Fed Kugler speaking. Other than that, you guys are good to go today. So again, key data, 8:30 drop, and then 10 o'clock, you got more key data, guys. All right. Amazon last night did report earnings. and Amazon went to the downside a little bit. So we saw a pretty big drop within like a good 5-10 minute window on Amazon. We closed yesterday at 238, got down to like 222 on Amazon. That was a massive like 16-point drop within 10 minutes. I watched it. It was exciting. Right now we're at 231. So right now it's only about a 7-point gap down on Amazon. And that's assuming this is where we open on up. Okay. But we have data at 8:30. If market likes data and everything starts to move, we can absolutely see Amazon, some of these other stocks pick on up and chisel their way to the upside. So Amazon last night, again, earnings. If you guys are wondering why is it down right now, that is why, guys. Earnings last night. It's only down about 3%. Nothing crazy. Everything else is pretty much flat across the board. So, I mean, like Apple, Nvidia, Google, I mean, slightly down a little bit, like 0.1%. You got Microsoft up a little bit, Meta up a little bit. So really, you're kind of just flat across the board. Only big movers to the downside. You got Tesla, not even 1% to the downside. Amazon, 3% on down. And other than that, you just kind of look at the pre-market change on your heat map, and you could really see that everything's pretty much flat this morning as we're awaiting some key data at 8:30, guys. So we'll have to just kind of see what data looks like, how the market moves, go from there, and see if we have any good opportunity for today. That's about it. This week's kind of been slow, a little slower, slim pickets on the trades, but decent trades, you know, here and there. It's been okay. We'll see what today brings, though. All right. But with all of that being said, without further ado, now we can absolutely take a look at your stocks, the moment you've all been waiting for. We'll do some top-down analysis, see if we have anything that looks good for today, and we'll go from there, guys. As someone starting, what is a good amount to start with, both minimum or maximum? The Chad. So the very beginning, spend a couple of weeks in a demo account. A lot of people will say it's stupid to do that. I think it's really silly for them to say not to. Because if you're going to start with a new broker, like learn the platform, click all the buttons, make mistakes. Like, do you just want to make mistakes and lose real money making mistakes? Probably not. All right, so spend a couple of weeks in a paper account with that broker, get familiar with it, do some buys and sells, learn the platform, make mistakes and not lose real money, and get an idea of what you're doing. Understand how to look at a chart, read a chart, analyze the chart, get an idea of how you would trade. And then when you feel a little bit more confident as far as I know what I'm doing, I would say, man, just only start with what you're willing to risk. That's what I would say. And so if you're like, you know what, man, if I put $500 in there and I lost it, it wouldn't phase me and it wouldn't change my life, like really be devastating, then $500. If it's a couple $100, start with a couple $100, man. The goal in the beginning is not to make money. The goal is to build consistency, good habits, and really just make sure you know what you're doing and you find something that works for you. So key goal is consistency in the beginning. Because if you can get consistent with, you know, not risking more than $10 a trade to make 20, for example, and you can do that over, you know, 20, 30, 40, 50 trades consistently, you're going to feel pretty confident to do that with a couple thousand, for example. So a couple $100, man, to start, because the goal is not to make money in the beginning. It's to get consistent and actually understand what you're doing. Then, you know, it just really depends on what your goal is, man. So if you told me, like, I have a goal of wanting to make $500 a day trading options, I would say you probably need like 10K. Probably like 10K, and it depends on what you're trading. If you're trading options on Meta, they give you like 1 or 2 trades a day, right? Because those premiums are so expensive. But if you're like trading the SPY, the Qs, Apple, things like that, where the premiums are like $1 to $2 on the premium, and you're trading 10 contracts, maybe 20 if you scale to that, you could get that done in a $10,000 cash account. You could risk, you know, $200 to $300 a trade, which is reasonable for that account size. And if you're banging out 2 to 1, 3 to 1 trades, you got potential to make $400 to $600 per winning trade without risking more than like 200, for example. So I would say, like, if that was your goal to do like $500 a day on average consistently to try and get to like 10K a month, I would say like a $10,000 cash account with options would be plenty. You could probably do it with a little bit less, but 10,000 would make it a lot easier. That would be like a minimum starting point. But again, first step, paper account, get familiar with the broker, and then work your way up into larger capital. But you don't need like 20, 30, 40 grand to make good money from day trading if you structure your account correctly, if you have good risk parameters. You could do very well on like a 10K account. This is going to be TradingView. So, yeah, what you guys see on the screen, that is TradingView. Someone said Netflix, but I know Netflix just keeps hitting all-time high after all-time high after all-time high, man. And so when stocks are sitting at all-time highs, I'm not really doing a lot. Maybe I'm selling cash-cured puts if we keep pushing the all-time highs. Maybe I'm just selling some CSPs to collect that premium. But I'm not looking to get long up there, right? Definitely not looking to get long because we could roll on over. Not looking to get short because I don't know when and if we're going to roll on over. We're not sitting at any really clear defined areas where I necessarily want to be putting on risk and taking any kind of trade. So I know Netflix just keeps, again, hitting all-time high after all-time high after all-time high, man. But we can take a look at it and get an idea of what we have on Netflix. So this is Netflix on the daily. And we're just going to look left, and we're just going to start looking at, do we have anything in this window that stands out to us, right? So the first thing that stands out to me is we have this daily uptrend, right? You can see low, higher, low, higher, low. So like a short-term little uptrend here. And overall, we're in an uptrend, right? We can see that we're in an uptrend. High, higher, low, higher, high, higher, low, higher, high, a little bit of a higher low. Then you start to get this lower low, lower high, lower low. So you're in a little bit of a short-term, you say downtrend, but just pulling back. Big picture uptrend. This is a nice retracement, little short-term pullback. Then you break to the upside again, right? So you can still see overall, this thing is in a nice uptrend. And then you could put a literal trend line up against these higher lows, right? And you see that we're building on up with a low, high, higher low, a little bit of a higher high compared to the previous one, higher low. And this last higher high broke over that gap up high. So, again, overall, moving to the upside, I wouldn't be getting short at all because you don't know where resistance is going to be. And so you got to wait for the thing to pull back and retrace into some defined areas before you even consider getting long to maybe trade with some of this action to the upside on Netflix. And so now we just got to see where could the thing pull back to and where could be a good area to say, get in. So first little area that I'm really starting to kind of like analyze here. Because that was a pretty nice impulsive move to the upside, right? From like a low of 960 up into like 1015. So that was a pretty nice push to the upside there on Netflix. I mean, what was that like percentage-wise? It's about a 5% move on up. So, I mean, again, 5% move on up on this kind of a stock. That's a big move. You're talking, what is that, 50 points to the upside within 4 days. Pretty nice move. So you can see buyers really stepped in here aggressively. You got a little bit of a gap up this next day, and then you just kind of saw the impulsive move to the upside. So, I mean, this could be like a little area of some like daily demand here, right? Because that was the impulsive move up where we actually broke that prior high. We can see overall went a nice little uptrend. So if we came back into that trend line and came back into some of that, daily demand down there, that could be an area where you look to get long. That would put you around like 980. But my lane is finding key significant zones with confluence. When I say my lane, that's like my edge, my methodology, what works for me. So I stick in my lane. I don't just trade off like daily demand, daily supply, or lower time frame demand supply. I build that into the equation, but I do a lot more analysis to find where I want to get in. And that's what I do. So what I would do is I would just start looking at a lot of these lows right in this region. We can see that we've come down to this area several times and we've held it on up pretty decent. Let's go ahead and get that little area marked on up, right? We can see how we probably got to drag it down a little bit because we came down. That was our first pullback before the push. Pulled back again, pushed again. We want to bring the bottom end of that down a smidge and then really just start readjusting the top end. This is what I see. I see we break through this little zone. We come down 1, 2, 3, 4 days. We hold it, push on up, come back down again 1, 2 more days, and then see that big rip. So yeah, do you have some demand here? Yes. Do I have a nice tight zone that's, overlaying and inside of some of that demand? Yes. And so I like those nice tight little zones because it really allows me to like pinpoint where I want to get in. I build confluences around it. For example, we have this nice little short-term uptrend as well that could be respected. So I'm going to go ahead and get that little zone thrown up here on Netflix. That's like 966 to 970 area. But then I want to just go ahead and mark up those prior highs where we had all of that resistance. Right? Because you can see that we hit this level of resistance like 5 times. That's between 986 to 990. We came up 1, 2, 3, 4, 5 times. Got rejected. We broke it here on Tuesday, respected it, and retested it Wednesday before what? Boop, to the upside. All right, so that could have been a nice trade that you had on Wednesday, where you see all of that prior resistance break on Tuesday, retest on Wednesday, and then rip to the upside for a quick day trade. So that doesn't look all that bad on Netflix. So there's a couple areas to watch here on Netflix. And so first area that I would, again, be watching is that 986 to 990. But keep in mind, we've already seen the first retest off of it. We already saw that push. The first entry, the first retest is always the best. The second one, just lower probabilities. So if we do come down to that first zone and we fail to hold it, I would be watching that 968 zone because you also have that nice little short-term uptrend that's sitting right there as well. All right. And then the last thing that you guys can do as well is if we start to see, right, Netflix pulling back and you're like, okay, here's that swing low, here's that swing high, and you start to see the pullback, then at that time you could run a fib up against those 2 points and then see, do we get a 50% retracement before getting the next leg up? So at that time, you could run a fib on Netflix for another confluence and see if you have anything that stands out. But, I mean, right now you got to be hands off with Netflix. You got to be hands off. There's not a whole lot here. Am I the founder of M3? Yes, I am. Is that Devin? Devin, yes. Why do you ask? And keep in mind, there's a lot of spammers out there, guys. A lot of spammers on the internet. And, they reach out to you guys. They send you DMs. They follow you. I don't follow people, number one. Number two, I don't send you DMs unless you send me a DM first. So if you get a follow and then a DM saying, hey, I got some trade replicator. Hey, send me money. Hey, sign up. That's not me, guys. All right, that's not me. Yeah, M3. Yeah, stands for Master the Market, Master Your Mindset, Master Your Method. M3 is our unique methodology to our program that gets traders to profitability in as little as 12 weeks. And so that's what our core pillars, the core pillars of our mentorship program is. We're going to help you master the market, the 10%. That's going to make you super effective without overcomplicating it. You got to master your mindset, learn how to be disciplined, keep your emotions in check, build good habits. You got to work on the mental aspect. Then we're going to help you master your method. What's your methodology to trading? What's your unique edge? What's going to work for you based on what you trade in the time that you have? Those are the 3 things that we focus on, the 3 things that we excel with, and that's how we're able to get like insane results with a lot of our students. Do I trade live? Yes, I do with my students in the mentorship. What else we got? Can I use a fib extension on this? We can, yeah. Swing low, swing high, potential retracement low. We got to validate that retracement low. Let's grab a fib retracement first and see if that was a valid retracement low. We probably want to go off the low from the gap up. There was the gap up low, the curl, the push, the pullback. That's probably where you want to grab it. Right off that swing low, swing high, swing low, push. So now we can take our fib extension off of those same 3 points. So again, swing low, swing high, swing low. And where does your 100% fib extension put you? Your 100% fib extension puts you at 1028. 1028 here on Netflix. So yes, fib extension tells you your next area of resistance as we're pushing into these all-time highs would be 1028. You see that 78.6 extension right there? It was respected as resistance. You see when we gapped up on the 22nd of January, where did we pull back to? The 61.8. Not back into these prior highs, but surprisingly the 61.8 to the penny, and that's what we held up to the 78.6 extension, resistance for like 2 weeks. Now we're breaking. So based on that extension already being respected, I would say the 100% level would be respected as well. So next area of resistance based on that extension, you're on Netflix, is again 1028. 1028. If you guys have any questions about working with us, just shoot me a DM. Send me a DM, this account. I'll hit you guys up. We'll jump on a call. First things first, are you a good fit? Can we help you? That's the biggest thing. Because if I don't think like we can help you based on your goals, the time you have, and what you're looking to accomplish, like I'll point you in the right direction and refer you to somebody that may be able to help you better. Like if you want to trade Forex and swing trade Forex, like I'm not the guy for you. I could teach you a lot about trading that you can apply to Forex, but I don't trade Forex, right? Just like I don't day trade crypto. So there's going to be someone else out there that's more active with trading those that I have connections with that I can point you in the right direction. So I just want to first make sure like we can help you. And if so, explain the program, discuss the details. And if it's a good fit, we'll bring you in. But yeah, just shoot me a DM on TikTok. I'll hit you back up. And again, answer any questions you guys have. All right, we got data dropping in 30 seconds. All right, let's go see what the market does around this data. Again, I will never DM you. I will never send you a link to sign up for anything, right? Never, ever, ever. You cannot go to my website and sign up for something, and I do that for a reason. Because a lot of these people create fake websites and say buy, 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 right? And they're scams. I don't do that. All right, there's non-farm payrolls. Nice little pop to the upside. Let's go see what data was. I mean, we know what it was. Unemployment, non-farm. Non-farm came in at 143, forecasted at 170. Unemployment rate ticking down a little bit, 4% versus the 4.1 forecast. And you got that little reaction up. All right, so a little bit of a reaction up, and now we're starting to see algos really start to push this down based on, you know, absorbing some of this data. So now we're starting to see a little bit of downside here. All right, what's next? What is next on the watch list? Thank you. Yeah, the M3 community, great group of men and women there to support you. So if you guys are not in the free community, definitely do so. Links in the bio. But yeah, we had non-farm this morning, guys. Basically, non-farm. It's a report that tells us how many jobs were added or lost here in the U.S. During any given month. So we get non-farm, you know, every month. But it's excluding farm, government, some other sectors. That's why it's called non-farm payrolls, right? Because it's excluding jobs in farms, government jobs. Just how many jobs were lost or added in the U.S. So, like, if more jobs are created, means the economy's doing good. And if, you know, jobs are lost, just a sign that things are slowing down in the economy. So what were the non-farm? So we came in at what? 143K versus what was that? 170K. Was that up? I'm looking at private. No, yeah. Non-farm payrolls 143K. Forecasted at 170. Our previous read last month was up there. It was at 256. 256. And now that's a little disappointing. We came below the forecast, right? 143,000 jobs added. We were expecting 170 jobs added. Still jobs being created, but again, that's lower than the forecast. But then you got to look at unemployment. That's a pretty high impact piece of data as well. And so if you take a look at unemployment, we came in at 4% versus the 4.1. And so you're just starting to see a little, pop on up, a little bit of an overreaction. That's driven by algos. So why do you see that happen right at 8:30? Because algos are programmed to react to data and keywords. So that's why you're seeing that initial reaction. Now you'll start to see some potential follow through in one direction or the other. You'll start to see some actual movement, but you usually get that quick little algorithmic pop or drop right through data, the second it comes out. Like I said, it's a little disappointing. It shows that jobs are being created, but less than the forecast. At Louisiana, the housing market is strong. Currently, houses are selling very quickly. Yeah, same thing with Florida. I mean, it's relatively strong here in Florida as well. Relatively strong housing market down here. A lot of pent-up demand. I tell you that. There's a lot of pent-up demand. People are still buying. There's good supply. Good demand, but a lot of that demand is still pent up, waiting for lower rates to come down. That's me. And I talk to a lot of real estate buddies and whatnot, and they're like, things are great, but again, there's just a lot of people, a lot of clients that they have. They say we're just gonna wait until rates get back below 5, and we know that the Fed's gonna take it easier on cutting rates this year, so there's gonna be a little bit more time before buyers really rush back into the market again. I think when that day comes, though, and you start to see a lot of this pent up demand coming back into the market, you're going to start to see home prices tick up a little bit more. Yeah, I mean, they're throwing up construction left and right down here. I mean, new communities all the time. Yeah, dude. Yeah, it's crazy. I mean, houses on the market are like 90 days. I think the last time I looked at like this market that I'm in, specifically in like Odessa, Tampa, Florida, like the average time on market was like 90 days, and you're seeing price cuts. So you're not seeing people come in bid over ask. You're seeing price drops, not significant, but little bits. You still got like a 90-day average, like homes are on the market, but they're still moving. All right, what's another stock you want to look at? We had AMD. Yeah, let's go look at AMD. Pretty disappointing move after earnings, but we got bought right back up pretty quickly. You had that initial push to the upside, little base, another little push. It's kind of a light little level, nothing significant, little block there. And that's kind of what we saw on AMD, was it just came down into that little order block right here. We came down, bounced out of it. So yeah, you hit that. So if you were in a trade Wednesday off that level, that would have been decent. Now I would really just be looking at this gap. So you see this little gap level on AMD. I like trading gaps. They're simple, they're easy, they're fun. They're not too complex to trade. It's just a simple day trading strategy, trading inside gaps, both long and short. And the gap is sizable on AMD. You got a 112 bottom into the gap with a 115.38 top. And so I like trading gaps, but you see how we tried to get inside of the gap yesterday and we failed, and now we're dropping on back off. I would have to be hands off on AMD until we do this, until we get inside the gap at 112, hold inside the gap at 112, like intraday, whether that's Monday, Tuesday, Wednesday next week. And then I would literally just trade it long like this. This is how you trade a gap. So you're looking to get in at the bottom of the gap, right? So if we break in the gap, we hold the bottom. That's your entry. You put stops back below the gap. You target the top of the gap. and that's a nice day trade to the long side. You can already see good risk reward on gaps. That's why I like trading gaps. They're high probability setups. They're always good risk reward. I mean, you could push a 5-to-1 risk reward out of this on AMD. Then to the flip side, if you ever come up and fill the gap, you can take it short back down to the bottom. We call that gap fill rejections. Again, another potential 5-to-1 risk reward. They're super simple, and when they set up, and they typically play out. But yeah, with AMD, we already came down. We bounced out of that little daily order block back there. So I wouldn't touch it again. Like if you were watching this one, you know, Wednesday, there was an actionable trade, but we've already come in. We popped out of it. I wouldn't trust it again back down to that level. I'd be hands off to see if AMD could get in the gap, stay inside the gap, and then maybe come up and close this gap for a nice little maybe 5-to-1 risk reward on AMD. What was next on the list? Disney? Yeah, Disney's like so far off. It's so far off. Yeah. I mean, I kind of like what we have down in this region. Right here. All right, you're just kind of selling off. You finally put in a little bit of this bottom down here. Then you have this nice little push, little base, nice little push. They got this little order block that's sitting right here. All right, so you can mark up that little order block right there. You already see how we came down into it yesterday and reacted out of it. So, I mean, there's probably still a little bit left on Disney inside of this little daily block. But you see how we already came down to the top yesterday. And we already reacted pretty strong out of it to the upside. So if you could drag it on down and just look at the part of that block that we have not been in yet. But you still have to keep in mind that we've already come into it and reacted out of it. Other than that, we know where that's at. But I was looking at this nice little multi-month uptrend that we had here on Disney. You could see that we were just really grinding this trend line for quite some time. So I'm still going to get the trend line thrown up here on Disney. Nice little low, higher low, hits the trend line, bounces, hits the trend line, it bounces. We got this nice little uptrend that could be respected, right? And then not only do we clearly see that little block here that we just talked about that was created on the 22nd of January, I like to find my key zones, man. And so look at this level. Not only is it a nice little block that we just discussed, but it's also a zone that's been hit several times with good price action, good price movement. So that was our gap up low before that push. We came back down, we bounced, got below it, got above it, held it, pushed. Some traders would see that as a nice little reversal formation off a decent little level of daily support here. And so that's in line with that little order block that we could still see a reaction out of. So with all of that being said, I got my eyes on this like 108.24 to 108.64 region on Disney. And that does intersect this trend line. So, I mean, if we can kind of just slow and steady kind of pull back here over the next week, and we can come into that decent little zone of support, we would also be up against that multi-month uptrend on Disney. We could see a nice little pop and nice little push to the upside there on Disney. Nice little pop, nice little push. So I wouldn't really be all that crazy about getting involved in a trade with Disney until ideally we come back down around this 108 level. That's on Disney. Yeah, and we would want to tighten it up, really make sure we're connecting those points. And we had decent movement around that level. Flip it into a 5-minute and really see what we did around that level on a 5-minute time frame. And yeah, I mean, it wasn't all that bad. Came down, bounce, bounce, nice push. Get below it, resistance, nice drop. Resistance, nice drop, resistance. A little bit of support here, but got below it, stayed below it, fell. It's a decent level. And it does give you a little bit of that confluence as well, because you do have this nice multi-month uptrend, right? That's been hit several times. So, I mean, we come back down to that 108 level on Disney. We hold it. That could be a nice opportunity to get long on maybe a low-risk swing trade. You know, put stops right below the trend stops below that level of support, and then ride it back up to like that 117.50 level. You could already see low risk, high reward, but you got to wait for Disney to get there. And then you got to see a bit of a reaction, some kind of confirmation that we're pushing off that level. Then I would say we have a good trade on Disney at that time. What was next on the list? That was Disney. What's next? Apple? I think I saw Apple. My Apple analysis still hasn't changed. It's still the same as the other day. I'm waiting for Apple to come down around 222 for an entry to the long side. If we can get down to 222. That's if. I was kind of hoping it came down this week to 222. We have some of this daily demand, nice zone of support, multi-month uptrend, and this 200 SMA. And you could see all four of those things line up at the same price. That's multiple confluence. Right, the trend line has nothing to do with the 200-day moving average. Those two things have nothing to do with demand. Those three things have nothing to do with daily support. All right, so you have four independent, separate reasons to get long, and those four levels line up at the same price, and that's 222. So we still have potential, maybe into Monday or Tuesday. Like Monday, Tuesday, if we're at 222, I think there's still a good trade to get long here. After that, we just start to lose one of those confluences, and one of those confluences that we lose would be the trend line, which is not a big deal. It's just a trend line. Those other three confluences are obviously a lot more significant than a trend line, but it's nice to see that reference. So I'm still waiting for 222 to get hit. You see that little green dot? That's at 222. Ideally, if price can get there and we see a reaction to the upside off those four levels, I want to get long and swing trade Apple, maybe going like 60 days out on some calls. But right now, we're at 232. So it's like we need it to come down $10 before this thing possibly sets up for us. So not a lot. We'll get to the SPY here in a moment. We still got some time. Let's go look at the last one you guys were talking about. That was NVIDIA. So let's go look at NVIDIA. So Apple's on watch. I don't know why Uber's still up there. That was a trade the other day. NVIDIA. I would just start with this gap on NVIDIA. It's from wick to wick on the gap. So you're going wick. Actually, I think NVIDIA, we were running body to body. Were we running body to body because we had good price action off that body to body? Yeah, we were body to body because price action was good running up body to body. Because even if we ran it wick to wick, still not in the gap on a wick to wick, but you have better price action body to body on this particular stock. That's NVIDIA. Yeah, I would run my gap body to body and keep it body to body, because what did we see yesterday? For the first time, we're inside the gap. We stayed inside the gap, and now we're pushing to the upside. So right now, if you're not in this, I think you're too late for a gap fill. Your entry was at 125. You are at right now 128.60, so you're $3.50 off from a really good low risk trade. But there still could be a little something, something. And that little something, something is if we can pop through this 129 level. So if we can pop through this 128.39 to 129.07 level, I think there could be another opportunity to get in and continue to play this long into that gap. But that's only if we get through that level. Like, I wouldn't just get in here, just like, oh, it's in the gap, it's got to go up. No, your best entry is down here. Your stops are below the gap. If you get in right here, you just really increase that risk, and you naturally reduce your reward at the same time by chasing this stock. Literally $3 doesn't seem like a big deal, but $3 drastically increases your risk and decreases your reward. And so we can't, really justify getting in. Body the body on this gap. Okay, here on NVIDIA, body the body gap. Mark up that little zone between 128.39 to 129.07. You can see it's a nice little level of daily support, turn resistance. Not bad. And we're sitting right at it right now in pre-market. So if we see a nice break to the upside today through that zone and we can hold it with some proper support intraday, I would consider getting long, knowing that we have some opportunity to get to this 142. But if we fail to get through that zone, I would really just be hands off. And let's see if it comes back down to 125. Because if we come back down to 125 and continue to hold inside that gap, there could be an opportunity that we see here today to get long on NVIDIA to the upside. It's time for me to warm up my coffee. We only had 27 viewers today. That's weird. You usually got 100 or two. Interesting. All right, let me be right back. I'm going to go warm this coffee up, and then we got time for one more. One more. So what is it? We'll take a look at it. You are so patient. Yeah. Like when it comes to trading, 100%. I've been a very impatient trader 3 years of my career. I see the results that gets me. Not good. Lots of losses. And then I know what patience does for me. Right? It allows me to trade the best of the best. When I'm trading the best of the best, most of the time they're winning trades, not losers. By being patient, I'm able to take the least amount of risk and make the most amount of money. And so I'm more focused on quality versus quantity. I used to be a very impatient trader that traded a lot. And there was a period of my career where I was impatient. I traded a lot, still made money. But I would spend hours upon hours in the market, trade. And then more patience, quality setups versus quantity, lower risk, higher reward, A+ trades. And I actually make more money in less time going about it this way. So, I don't know about you, but if I can come in and make more money in 2 hours than what it would take me trading all day, I would rather do that. I'm just not crazy about the SPY and the Qs today. I am just not crazy. I haven't been crazy about the market pretty much all week. It's been decent. Nice breaks and retests, couple quick reversal trades. I just haven't been crazy about this market this week, but that's just me. So like today, I'm not crazy about the SPY. I'm not really crazy about the Qs. I like Apple, but we still got a lot of time before we get there. Tesla, not bad. We have this little base, nice pop, shoot on up, pull back a little bit, another little base, nice little impulse move on up. There's a gap on Tesla that we could fill. Yeah, there's a little gap down here that could fill on Tesla, but again, that's in like the 350s, man. So you got a lot of time there. It just, things look good. When you look at a lot of these stocks, things look good, but they're not to the levels yet. You know what I mean? They're just not quite at these levels. So it's like, you got to be patient, guys. Like, there's a lot of good looking stuff, but we're still $5, $10 away from the best entries. You know, and I'm not going to chase a trade, get in prematurely, and take an unnecessary loss. I'd rather sit back for a week, even if that means I'm not really trading a whole lot. And again, just wait for the best of the best. And that's what it comes down to. You just got to wait for the best of the best. And historically, February kind of duty. Historically, February, little duty. So there's some good stuff around the corner. I think come next week, we start to see things look a little bit better because we'll be at some of these nice key zones and key levels. But right now, guys, I think the market's really testing your patience. Dustin, my man, what's up, dude? I got time for one more because on the Zoom, we're going to really look at SPY cues. But like I said, it doesn't look all that phenomenal on the SPY and the cues. But in the Zoom this morning, we'll take a look at that with you guys in the mentorship. Someone's beat it. Yeah, man. How you remembered my birthday, man? I'll be 32 coming on up, 32. Last one is Boeing because that was the one I saw. It was Boeing. That was an earnings drop right here. That was earnings. So, I mean, you got to tread lightly with this zone. In my opinion, you got to tread lightly. A little bit of a continuation. Came back up. Not really, because we didn't hit those unfilled orders. But then we had a nice drop on down, but that was an earnings play, so I would just tread lightly with that. I would just go throw your next key zone up on Boeing. So your next nice little zone here on Boeing. You're gonna have some resistance up here around 191 to 192.60. 192.60. Yeah, I like that. I like that. Because we have multiple hits, multiple touch points. And those are nice, strong levels. I mean, look at how much conviction you get with that zone. I mean, you can run the sucker all the way back to 2020, where you see resistance, support, support, resistance, resistance, support. We get above it, hold it. Nice big impulse to the upside. Back below it, and you've been below it for quite some time. So you just got this ceiling overhead between 191 to 192.60. Got that big old ceiling overhead, and that's where you're getting up to next. So if we get up to that zone and you fail to break it, I do believe we start to get some downside. If we get through that zone and we hold it, then you got some room to like 203. There would be some room up towards around like 203 here on Boeing. And there's a little gap that could fill as well. Like you got a gap up here at 198.50. So we could fill that gap. But if we get more into this zone, I mean, potentially to like 203. But we have to see what Boeing's going to do at this 191 to 192.60 first. Here recently, we finally get a bit of this uptrend. Low, high, higher, low, higher, high, higher, low, higher, high, higher, low. I wouldn't really count that as a higher high. It was a wick, not a body, but you got a body. So there's your higher high, actually. Right there. Here's your higher high. Not there. That was a wick. So low, not a higher high. You still got another higher low, higher high. So you got this steady little uptrend moving on up. You could get a reversal off that first zone that I talked to you about. Decent little reversal potential. You've already come down. You filled that. You wicked. Consolidated. Little base. Nice push. You probably get a little bit of a pullback entry down around 174.30 to 177. You'd have a nice little uptrend sitting right there as well. Where are you at right now? It's so far off. I think you get up to resistance first on Boeing. I mean, at this pace, seeing some nice action these last couple of days, I would say we're going to get up to that 191, the 192.60 zone first. And then I would wait for some kind of confirmation that showed you seller step in. If we come up to that zone and we get rejected and we leave a nice, like upper shadow rejection off that zone, then I would say realistically, we could see a short-term pullback towards around 176 to 177 before we start to see buyers potentially move on in and then maybe get that push up into the 200s on Boeing. So are we anywhere close to that zone? I mean, we're getting there. Again, good-looking trades, good-looking stocks, good-looking levels to take action at and look for some great trades, but we're just not close enough to them to be looking to trade them today. So next week, let me know about Boeing. Say, hey, man, look at it again. Are we potentially setting up? We'll do some more analysis on it, see if we can identify our confluences, if there are any, and we'll simply go from there and see if we have anything worth trading next week. But right now, with a good support level down around 176, resistance at 192, and you're right in the middle of those two main points, it's a no-go zone until we get into one of those two levels. We get there, then we have something we're talking about. All right, but have a good day, guys. Stay blessed. All right, I'll see you guys back here Monday. Trade smart, trade safe, as always. All right, you guys have any questions, you guys can shoot me a DM on TikTok anytime. I will help you guys. I will recommend things to you, help point you in the right direction, no strings attached. Just want to be someone that can help you guys out in a space that's very saturated with a lot of traders, man. All right, so stay blessed again. Happy, safe trading, and I will catch you guys back here when? Monday, baby, 8 a.m. I'll see you guys then. Peace out.